Hello and welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and today we're going to be talking about everything we could expect to see this upcoming week within the markets. Tomorrow being August 4th. And we did have our first trading session of the month on Friday. And as we all know, it was very, very bloody, just like it was all of last week. So a lot of the fear, uncertainty, and doubt last week started on Wednesday when Jerome Powell came out, said that rates were not going to be cut at that meeting, and also did give some hawkish remarks around interest rates. And so that put some fear into the markets. And then on Friday, things got even worse because we do know that the jobs numbers came in really bad for the month of July. But not only that, the previous 2 months, the numbers were revised down. And so we talk about this every time we do our weekly talks or when we talk about the statistics that come out. The numbers are typically higher than what they actually are. And what the government will almost always do is revise the numbers down in the future. And this is a positive in the moment because when the numbers do come out better than expected, when they beat Wall Street's expectations, everybody celebrates and the markets will pump green. But then this is the reverse side of it where it could be seen as a bit bad because the numbers were really revised down by 258,000. And so because of this, Trump did actually fire the head of the Bureau of Labor Statistics. So there was the firing of that individual. Makes some good television, some funny headlines. And also, we did have the Fed Governor Cooler say that she is going to be resigning, giving Trump a nominee on committee that sets interest rates. So we know that the president has been very upset with Jerome Powell and the Federal Reserve because he wants to see interest rate cuts. And so this governor is stepping down, allowing Trump to nominate somebody onto the committee. And I'm sure Jerome Powell is not too happy about this because you already know Trump is going to pick somebody that is pro-Trump and also pro-interest rate cuts, which is the opposite of what Jerome Powell is. And so this, the way I look at this is a situation. It's kind of like when you're in school and you have a seating chart that you're favorable of, right? Whether you're sitting next to your friends or a girl you like, and everything's great. You have fun every day. You even look forward to showing up to class, and then all of a sudden the seating chart gets changed or you get moved somewhere else in the class. Never as fun from that point on. So I'm sure Jerome Powell is feeling the pressure right now. But because of all that fear last week, we did see the volatility index shoot up, and we've also now seen the fear and greed index go to the lowest levels we've had in some time. We have been between greed and extreme greed for quite some time, but with everything that happened in the markets last week, it pushed us down all the way to neutral. And I know there's a lot of fear, uncertainty, and doubt in the markets right now because myself, even though I make my YouTube videos, and I talk about all of this, I also spend a lot of time on YouTube myself, watching a bunch of other YouTubers, seeing the news, being on forums, seeing what general opinion is. And there is a lot of fear, uncertainty, and doubt right now. A lot of people are thinking that the markets will drop, especially because last week was so bloody and it was a big gap down in both of the major indexes. So on screen, we have the SPY and the triple Qs here. We could see that there were some big gap downs, and we did come down quite a bit on the relative strength index on both of these major indexes, but we are still sitting a bit high on the MACD. So some see this as a selling opportunity, a lot of panic in the market. Myself, though, I do believe that the markets will continue to push forward because truly what I believe pushes the markets more than anything else is exactly what Trump is looking to have cut, and that is the federal funds rate. So we are looking for the rate cut coming up. That's what the markets have been expecting, and the markets have continued to push up. And when we look at the history of the federal funds rate, and when we just compare it to the Dow Jones Industrial, when we look through history in time, I personally believe that right now where we are at is a great time to buy into, because yes, there is a lot of fear, uncertainty, and doubt, but the markets really, more than anything else, really move off that federal funds rate. And I'll explain exactly what I mean right here. So what I have here on screen is the funds rate, and we could see here in the 1980s when interest rates were right around 20%, how high they were right there. When we go look at the Dow Jones Industrial, we could see at that time the markets were decently flat. But when the interest rate did start to come down into the 80s and into the 90s, that was really when we started to see the markets pump up, and things have only gotten crazier in recent years because we have seen the federal funds rate go down so much. So if we look into 2000 and then we look at the DGI, we could see that through 2000, as the interest rate was really, really low, the markets were pumping up. And then in 2008, we did get that crash. And what happened? Well, the Fed cut it even lower. Than we had the historic 0% in 2020, all the quantitative easing that we have had. And as we could see, the markets have only pushed up. So the reason why I bring this up is because the markets really are influenced off of this federal funds decision, and with the horrible job statistics that just came in, and with a new governor coming in, there could be some pressure building up on Jerome Powell, and he may have to cut the rates soon. So when we look at Kalshi, which is just the betting odds for general politics and everything like that, we could see that the chance for a cut after the jobs numbers came in has risen significantly. So now for September, there is a 73% expectation that the Fed will cut rates. And so because of those horrible numbers, the markets are actually getting closer to that rate cut. We know that Jerome Powell says he's data dependent and he is just waiting for the right time. So this could potentially push us more into that right time. And again, when we just look at the federal funds rate and the major index of the Dow Jones Industrial in 2020, that was a horrible time. If we talk about a time when fear, uncertainty, and doubt was at its peak, even higher than it is now, that was in 2020, right when the pandemic initially broke out. So some people thought that was the end of the world, but what really happened there is the government and the Fed came out, showed their hands, and that was that they were not going to allow the markets to fail. They cut interest rates down to zero. Everything became much more stimulative. So right now, again, I watch a lot of videos. I see a lot of different opinions, and a lot of people think that we are heading right towards a recession. Well, if we do head towards a recession, the best place to put your money is going to be into the stock market, because the Fed is going to cut those rates. Things are going to get more stimulative. And if we talk about the current recession that we are possibly entering into, I don't think that we are going to go straight to a recession. But if you do buy into that narrative, it's going to be a recession of very high prices. You know, inflation has gotten very high, so food prices will be high, gas will be high, everything else like that will be high, but so will assets. So all the assets in the stock market should be pushing up also. The only way I see a recession where that doesn't happen is if the Fed doesn't cut rates. But again, so much of the economy really is built on this castle in the sky off of easy monetary policy, and the Fed has never left quantitative easing. Even with them raising rates over the last few years, they are still basically quantitative easing, and they will continue to do so. So that is all around the fear, uncertainty, and doubt side of the markets. I personally believe that with fear being so high, we could see a little bit more bleeding in the markets, but I think we are getting ready for a rip up. So just like always, when the markets start to bleed and when the common man starts to panic, and when you start to see all these thumbnails of and fire all around the YouTuber and it's the end of the world, that is typically the time to buy. And then when we look at the economic calendar, we have just factory orders on Monday. We do have on Tuesday the U.S. trade deficit. Wednesday, we do have federal Governor Lisa Cook and Boston Fed President Susan Collins talking. Thursday, though, is going to be the biggest day out of the week, at least when we talk about the economic calendar, because we do have the initial jobless claims on Thursday and numbers around productivity. So it'll be interesting to see what these numbers come in at, if they will come in worse than expected, and what we could see. Overall, though, everything this week I don't think will cause too much fear, uncertainty, and doubt in the markets, or even cause too much of a spark. The bulk of what we got was really last week, again, around the jobs numbers, and then even more importantly, around the federal funds rate, because that is what really moves the markets. But yeah, just keep your eye on Thursday, because we will have the initial jobless claims. And so maybe a little bit of fear from that event. Going on the bullish side of things, this is going to be a massive month for earnings also. So when the fear, uncertainty, doubt, and panic passes through and optimism comes in, or if we see a big catalyst, a lot of these earnings could really help the markets push forward, because we have a lot of big names reporting this week and the coming weeks. So we have Palantir, we have Hims, we have Cat, Pfizer, Uber, Shopify, Disney, McDonald's, SoundHound. We have a ton of big earnings this upcoming week, and in general, this month is loaded up with earnings. So I am very excited. I think these companies are going to report some pretty good numbers, hopefully, and all of that should help to spark the markets. But in general, if you are feeling fear, uncertainty, and doubt right now, this is a moment when you could just think about your investment goals and why you may be feeling fear, uncertainty, and doubt. I always have some cash on the sidelines, and when opportunities like this present itself, that is when I will buy great buying opportunities when others are selling, running for the hills. But I would be curious to hear what everyone else thinks in the comments section below. So please let me know what your moves are, what you're doing to prepare for the markets this week, and just what your general opinion is. As always, I appreciate you guys for being here, and I will see you in tomorrow's daily talk of stocks.